Good afternoon, everyone. Today is Wednesday, the 21st day of January 2026. So, lots of stuff going on right now. Trump is overseas talking about all this Greenland stuff and everything else. There's a whole bunch of things going on. The reverse carry trade is unwinding in Japan. There's all kinds of things happening right now. Moving the markets around pretty quickly. And one of those markets, as you will see in just a minute, larger time frames. Good when the markets are jumping around like this. Larger time frames are good, better than the shorter time frames, because in the shorter time frames, let me just get rid of this for a second. This synthetic trick, I'll show you that in a few minutes too. In the shorter time frames, this is gold. You see the spread we have in gold right here, how thin it's trading. There's all those gaps, and that spread that we have in there. I'm not going to be trading any gold in this session. Okay, so I'm going to replace the gold with the ES. I'll just put the ES up here on this one. The ES7 range is what I'll put there. Alright. Now, the beauty of what we do is you can just substitute anything in there. Anything you want to put in there, you can just substitute in there. Now, speaking of just substituting anything in there, we just had a trade here on the ES, right here, this purple arrow trade. And I believe it just gave me a break even right in there, but I won't. I'm sorry, that was the NQ. That's the NQ. I put it on the S. Well, it still gave me a break even on the S too. Okay. Well, either way, I have a lot of stuff I want to get into today with you guys, and hopefully we will. We should have plenty of time to go over it all and play some, a fair number of trades as well. Okay. Today, as I said, is the 21st day of January 2026. Now, the last time I did this, I totally forgot to even talk about this. If you have not taken a trial, go here to tvtrades.com, click on any one of these things right here, and it'll bring you all the way down to the bottom. It's $25 a week after the trial, or $90 a month after the trial, $9.97 a year after the trial. Most people end up going for that. They start out with that, but they end up going for that, and then they eventually go for that. So we actually have more people on this than we do on that. We have more people on this than we do on that right now, because people rotate off the $25 weekly onto the other less expensive discounted plans once they understand what's going on. So if you want to skip that step, sign up for one of these to begin with. Anyway, that's enough of that. TargetViewTrades.com. TargetViewTrades.com. You can always go to TargetViewTrades.com, and the next webinar is right here. You can sign up for the next webinar. This is to you, Wayne, because you were saying you had trouble finding it. You can always go to TargetViewTrades.com and sign up for the next webinar right here. This is next week's. You can sign up for it right now if you want. You can also take the trial from this page. Okay, you take the trial from this page also if you want to. And yeah, and that was that. So I have some stuff. Well, let me show you some stuff to begin with. Okay. So the green one down here is a synthetic trigger, and I created a synthetic divergence thing to go with it. And this divergence thing is really, really good. What I wanted to do is do it on a larger time frame. I'm going to do it like 100 range. That's what the initial thing had said. This thing, larger time frames, synthetic trigger. This is what I was referring to. This is what I was referring to, the 100 range here on the NQ, and you can do it on bigger time frames on other markets too. It's just the NQ is the one that I've been playing with. And obviously the green one here is a synthetic trigger, right? And the synthetic divergence indicator is the blue one. Now, there's things that I'm looking for in here, in particular in here, but I've found that I may not need to use the synthetic trigger with the synthetic divergence. I may have found a better way to do it, but what I was looking for is like this kind of separation right here, this spot right here. Whenever that happens, almost always whenever that happens, the very next bar is gonna reverse. Okay, and it goes in both directions. The very next bar reverses. Okay, that's what I was looking for. But I found another way that I can use the same tool, and what this goes toward, this kind of thing, because you don't really get a warning that it's going to happen. So what this would be perfect for is fully automated trading. Now I know that's something that's way out there to some of you, and something that some of you are really, really interested in, and it's not that far away. There are some people, let me just see who's in here right now. Some people who might be a little loopy coming back from a procedure right now, who are actually using fully automated trading. They're not using this on it, but they are getting stuff off of TradingView into a prop firm, actually, which is a great thing to do. That way if things go completely haywire on you, you're not going to lose. Not going to blow up an account. You blow up a prop account, but that's not that big of a deal compared to blowing up a regular account, I imagine. I don't know. I haven't blown up a prop account, and I haven't blown up a regular account in a really long time either. But but I remember the feeling of blowing up a regular account. Right? I've never blown up a prop account. But anyway, I only actually tried one, and who was it with? Top Step, I think. I just did it to see if I could get these indicators on the Top Step thing, because they use TradingView, and I couldn't, so I canceled it. Yeah, so this is something that I'm working on. Alright, now let's go back to this one that's already running over here, and we have all our normal stuff running on this, right? And the 19 range is going really fast with the NQ right now. Like right now, the purple thing right there happened so quick. It's kind of hard to get into, but I just jumped on it, and it just gave me 4 ticks right there. And this is not coming out of the overbought, so you're not going to have anything there. This outer band one right here worked out pretty well. The purple one right there worked out pretty well. This is about to set up another outer band one up here, like that. Okay, and there that one is right now. And we'll see if that gave me 4 ticks. It went down and gave 4 ticks before it went right back up. So I have 2 4-tick trades so far, and there's another purple one right now, bullish. Right, and that one is right here. That's also got 4 ticks in it, and we're in at 0.25. That's 16 ticks right there, I think, or 12 ticks. 12 ticks, 16 ticks, 16 ticks. It's about to give another one right here. I mean, the marks are just jumping all over the place. Here it is. It gave another one. There's another 4 ticks. There's 16, 17 actually, 20, and that's up to 23. 16 up to 23. Whatever that is. 7. 28 ticks. Wait, I'm starting to just throw a whole bunch of trades on here without keeping track of anything. Let's do this. So far in the NQ, we had 2 8-tick trades, 2 4-tick trades, and I don't even know. I have to go look. Let me go and look and see what we actually had go on there. So that last one was 1675 up to 22. The one before that was 1550 up to 1825. So that was 11 ticks, and 1675 to 22. That's 17. So 11 and 17. And there was one 4-tick trade in there too. So 11 and 17 is 28 plus 4 is 32. So right now we have 32 of those and 3 trades and 0 stops so far. This is where we stand. $1,600 and we're just a couple of minutes in, and it's not even the busy time to trade right now. Alright. The markets are very fast. That's what I thought, Jessica. I thought that's what you were using. And yes, the markets are very, very fast right now. The ES is not so fast. That's why I have the ES up here. Now, what I wanted to show you is this divergence thing that I created. It also works with the regular TV trades trigger. Now the way that this works is when and on any time frame too, okay, but as the regular trigger goes into the overbought, this divergence thing passes over the prior bar value of the trigger right there, and that usually indicates that there's going to be a reversal. Okay, do you want to have some divergence in between it? Divergence meaning separation, like this. Okay, that usually means there's going to be reversal when it goes in there like that. The very next bar, you guys see that? As I go from this bar, don't look up here, look down here, I'll show you. Okay, as I go from this bar right here, crossover, that goes into the overbought, and that crosses over into the middle like that. That would be a short. Okay, and it's got to cross over it and cross over the other one right there at the same time. That would be a short. This would be a short right here. That one I'm not so sure about because I'm not sure it really crossed over right there. But this one right here would be a good one. Right there. That's an easy and obvious one. And in the other direction, the same thing. Okay, so this one right, nope, that's not one. Right there, that would be a long right there. So I make that green. That would be a long right there. And this would be a long right here. Okay, this be a long right here. That would be a long. Yeah, that would be a long. See what I'm looking for here is when it turns green down here on the bottom, that means it crossed over into the oversold. So without even looking at price, that's what I'm looking for in the price action using this thing that I created. And what you expect right here, you expect a reversal on the next bar. You expect it to go down on the next bar. Okay, so after this bar closes, you sell and down. After this bar closes, you buy and up. After this bar closes, you buy and up. After this bar closes, you buy, and this one actually pulled back a little bit. Probably would have stopped out on that. That looks like the first stop out, unless it went up some. It went all the way up first before it did that. It would have bought there and it went all the way up, and then it pulled back. And this bar, when it closes, you buy. When this bar, when it closes, you sell. You see what I'm getting at here? So these are some other ones that I guess I did without looking at it. You would have sold. And this is the ES. Any one of these. This one right here, you would have just bought the open of this purple bar. Okay, what I was looking for was something to buy the open of the bar instead of buying the close of the bar. Like the purple bars and the white bars and all that stuff. These outer bands, you're buying the close of the bar that's going back in the right direction. And what I was trying to do is find something that you could buy the open of the bar that's going to be the one that you would buy the other way. Like this right here with this purple bar, you would have bought the open of the purple bar. Right? With this down close right here, with this one into the oversold and that crossed over it, you would have bought the open of the purple bar instead of waiting for the close of the purple bar. They both worked, but you get in a whole bar earlier. That's what I'm trying to do. Okay? And I'm pretty close. I want to make, obviously I want to make the most money that I can doing this, and that makes it easier for you guys. And I really, I was trying to, all the stuff that I'm doing, when you see me coming up with these other things, they're in my quest to make this better, to reduce these right here. That's what I'm trying to do. I'm trying to reduce these, and I did actually get it. Where is the cross? Let me blow it up and I'll show you. Okay, I did actually get it so that it would reduce almost all of those, but it reduced so many of the successful trades as well. Okay, let me blow this up so you guys can see a little better, and I'll bring up the bottom too. Okay, so you see right. Let me just move this one off. See right here, the red right there, how that is crossing the blue right there. Okay, and it crosses that blue when this crosses up into the overbought. So that happens and that happens at the same time. And you sell the open of the next bar. Okay, that's what I mean. That ran mark, you both ask the same question at the same time. And it's the same thing on the other side. When this crosses this and this crosses into the oversold at the same time, you buy the open of the next bar. Okay? Do you see it? I'll have it automated so it does, so it'll figure it all out for you. But it's a pretty cool feature, and I've been, when I'm creating things, I get these ideas, and it's, I feel like a mad scientist sometimes, and sometimes I just make up mathematical formulas that I think might do something that I want it to do, and I apply it, and I see what it does, and say, hey, that worked pretty well. And then I just kind of work my way away from that, trying to find, is there a way to signal the cross? Yeah, that's what I was saying, Larry. This kind of thing would be great for fully automated trading, because there is no real good signal that it's going to cross. You don't know when you get to right here before it's going down. All you know right here is that they're both going down. They both went down from the last. They both left. Well, this left the overbought, and they're both going down. You know right here, at this point, that if you have a down close on the bar, it's going to be a trade, or it's likely to be a trade. Okay, you know that when it's right here. So the question was, is there a way to signal the cross? And if you look at this is what I'm pointing at right here. You see when that part went down and that part went down, and they stopped short of doing the cross and going into the oversold. At that point, remember it takes 2 bars to get from the overbought to the oversold. At that point, you know that the next bar, if it closes down, is probably going to give you what you want. Yeah, I just created this thing, Mark. This crossover thing. I'm using all the synthetic stuff that I had created. So it's looking at other time frames basically, and like in here, if you go on this side, oh, this isn't even the right one. I'm sorry, that's on the other one. The synthetic one's on this one. In here, this is the synthetic one here. You have to use this synthetic range, and you can choose, build from a different time frame and stuff like that. I'm gonna find the best one, and I'm just make it a default so you guys don't get all messed up in there. But so it's new, but I'm gonna make it all into one thing. You won't have separate things like this, because when you have separate things, that means every time somebody signs up, I have to give permissions on every one of these. And if I add another one, then I have to give permissions on another one for everybody. And that's a pain in the neck. So I want to consolidate all these, get them all into one. I was actually looking at a way to do that too in the last 4 days. I can do an import thing and import everything into one, I think. I'm not sure about that, but I might be able to. The question was, is this divergence crossover separate from all the other trades that I've taught? And yes, it is. But again, I'm finding all these things out as I try to reduce the number of these things right here. See if I can reduce that. I'm trying to reduce that to make all these outer band things better. I mean, the outer band things are great as they are, but I know I can make them better, and I can reduce the number of stop outs that you're getting, and that I'm getting. And ideally, that's where we all want to be, right? Oops, I didn't mean to do that. Where's this other one over here? I need this, I guess. Alright, so I wanted to point that out to you guys and show you that. That's over the next week. Today's Wednesday, right? So we have a white bar. What market is this? This is the yes. Where's my yes? Alright, so we have a white bar short right there. I just took it, just brought me to break even, and it just gave me a break even. Sorry, I can show you the print on that. Actually, it gave me 1 tick. I'll show you the print on that. I thought it gave me a break even, but here it is. Oh, wait a minute. It didn't give me 1 tick. I thought it did. Huh. It took 1 tick away. Alright. Well, it doesn't really matter. I'll mark that down. Let me mark that down. It doesn't really count as a stop out, though. I don't want to count that as a stop out. But we did get minus 1 tick on this. Yes. Minus 1. It was supposed to take me to break even. But it slipped me. I had one this morning, slipped me 12 ticks. That was not a good experience. Alright. My break even on the ES, it goes to break even after 4 ticks. Yeah, I had this thing, I have that all out here. If you go to Target View Trades, targetviewtrades.com, I have that all right here. Right here. So on the 7 range, stop goes to break even after 4 ticks. And on the 9 range, I go to break even plus a tick after 5 ticks. And on the 19 range, I go to break even plus 4 ticks after 10 ticks in profit. Okay. I actually had, I don't know if I can bring it up on this computer, but I had, oh, I might be able to, it might be over here. I was messing around Saturday night, I think, and I had, I came across this thing that'll build, said I just have to put in my website and tell it what I want to do, and it'll build a better one for me. And, well, I did, and it actually, in 6 minutes, it rebuilt the website for me. Both my websites is 6 minutes on one and 8 minutes on the other one, on the Target View Trades and tvtrades.com. And they actually made this, it took all this out and put it in like a tabular format, and it was actually really nice. I was going to try to bring it over and show it to you, but I can't find it. But I will have this more organized for you. But this is at the home page at targetviewtrades.com. This is my risk management stuff. Okay, this is how I do it, Shane. Okay, it doesn't matter what market it is, it's the time frame. Okay, because I'm always using range bar, so it's the time frame on a range bar. Now, let's get back in here. I got rid of my gold, right? Yeah, okay, I took this ES purple right here. I'm going to lock in 4 ticks on that. I'm going to lock in 12 ticks on that. Okay, and that was this ES purple right here. Hang on. So now we're at plus 11 in 5 trades. I know, I'm sorry. Let me put it back over here. I know I'm jumping all over the place. I don't mean to jump all over the place like this on you. If you get an arrow like this one here, the white bar with the black arrow, it doesn't really matter where the black arrow is. If you get a black arrow with a white bar or a purple bar, those are usually really good trades. Okay, no matter where the black arrow is. Ideally you want the black arrows to be outside the band to take the black arrow by itself, but if you happen to get one that is with a white or a purple bar, those trades usually work out really well. Okay. Here's another purple bar. Yes, I just jumped on it. Here it is. And this has a 10 tick stop. It goes, watch, Sean, Shane, it's automatic. It goes to break even automatically after 4 ticks. So if it goes to 4 ticks, it should go to 4 ticks. It should get up here to 38.75. It should actually get up here to 40.75. The Dom's not really showing anything on the upside, but one more tick. Yellow's got to get to 78. There it is. You see how it just bumped up automatically? So now just lock in 1. So it pays for it. We'll see where it goes. It should go up to 40.75. It should go right here. Okay, but we're out to 1. So I have it set up to do it automatically. You have that set up, don't you, Shane? If you don't have it set up, are you using Sierra DOMs? Oh, you're on NinjaTrader still. Okay, well you can do that with NinjaTrader too. I vaguely remember how to do it with NinjaTrader, but you should know. You're a smart guy. You know that stuff. Hey, I put this at 12 on this. That 1 tick that I lost. 6 trades. Okay, so we're at $3,100 or 310 with 1 contract at this point. See, if you guys only come to this meeting every week, if you only come to this meeting, then you'll be able to make more than you pay for your subscription. Here's another one. The purple one. I almost double clicked on that one when I bought it. Here it is. One more, stop to break even again. I'll lock in 2 on this, lock in 4 on this. That's $500 with 10 contracts. That's $750. I did double click it. Crap. Alright, well, I did double click it. I said I almost double clicked it, but I actually did double click it. Alright, so I got 6 on the first one and 4 on the second one. That's on the ES, so it's 10 more. I don't know, that's what I did do. I didn't realize I had to, I thought I kind of felt my finger twitch, and well, it worked out. But like right here, is that it? Yeah. So right, see, it's already crossed in right here, so that wouldn't be a trade that you'd want to go on. This one right here, the bar right there reversed, and that would have been the push down right there back into it. See over here, that right there would said reverse on the open of that bar, sell the open of that bar. That's nothing, that's nothing. That one right there would have said sell the open of that bar. That one wouldn't have worked out. That one, it's got to be an up close, not a down close. Okay, because this is going up, it's going to be an up close. Oh, so that wouldn't have even been a trade because it wasn't an up close. It's going to be an up close. Like that. Just sold the open of that bar right there. Okay, we're just about here for another trade right now on the ES. And get ready. Let's see, right there. You would have nope. Well, this one going in the other direction here. The down close. You would have bought the open of that bar right there. That would not have worked out. You would have bought the open of that bar. Now it does have a white bar right here. So the white bar you can trade right now. I just did. It's not looking so good right now, but and it just stopped me out. Minus 10 on that white bar. Okay, put that in. Let's say total. That stinks. We're down to 12 on this. That's 9. That's 1. Okay. But I think there's going to be a lot more trades. We have 9 trades already, and we're just getting started. We have a whole other hour. Masood, you logged in a little late and missed the explanation about the new line. Am I going to make a short video about that? Explaining that? Yeah, I am. When I'm finished with it, I'm going to I'll make a video about it. I mean, I'll make a short video after this is done today. About it. There's another one right here on the ES. This is an outer band black bar. My stop just went to break even. All right, it was right there. I just took that for a break even. But you'll be able to watch this video after too, Masood. Okay, so that becomes one more trade. And this. So I'll show you again what I'm looking at. Now I went to the ES because the NQ was just wild and it was bouncing all over the place. But what I'm looking for here, Masood, is let's do it on the ES again. Okay. For this to go into the overbought and this to cross it at the same time. And that's a reversal. Okay. Sell the open of the next bar. Sell the open of the next bar. And on the other side, like right here, buy the open of the next bar. Okay. And one of the other things that I said, if you're just getting in, one of the other things that I said, do I find the best time to trade my system to be closer to the end of the regular trading? Right at the beginning and right at the end mark is when I find the best time to trade. Again, guys, you don't have to get in here and take 100 trades. You know, I've taken now 10 since I've been talking to you guys today. I've now taken 10 trades with one stop up. You don't need to take 10 trades. You know, I'm up $310 per contract. I'm up $3,100 with 10 contracts, and I just stopped out on that ES a minute ago, so I was up $4,600, something like that. 40-something $100. But you'll need to get in there and make a little bit of profit. You don't have to make a ton. You don't have to try to do it all at once. You know, I know that in the last 15 minutes there's going to be a lot more trades. You know, we could end up with 30 trades if I keep trading like this. And the question, I don't know if I read the question out loud. The question was, do I find the best time to trade the system to be closer to the end of the regular trading day? And I like the first half an hour. This right here, a black arrow on a white bar or a purple bar, is usually a really good trade. Okay. Now, I trade, usually I get my goal for the day in the first three minutes. About 50% of the time I get my goal for the day in the first trade in the first 3 minutes. Okay, and I'll show you that in just a second. I want to see what's happening with this, because it's going to manage itself. It just went to break even. Okay, we'll lock in 4 ticks on that. Right, and we're out with 4 more on that. But if you look in here, you know, the number of times that I did it in 3 minutes or less, it's because I start at 9:27, and usually between 9:27 and 9:30 there's going to be a trade set up that is going to be good enough for me to get the goal for the day. Right, today it took 2 minutes in 1 trade. Is this today? No, that was in December. Sorry. This is today. 3 minutes in 1 trade today. But you can see the number of times it took 1 trade. So I like trading right before the open, like 9:27, not 9:25, 9:27. Right? There's just enough of a difference there. But I find that then, and at the close of the day, you know, the last 15 minutes between, well, the close of the regular market hours, between 3:45 and 4 o'clock, to be really good. Now, you guys know I also trade, well, I don't know if you all know, but I also trade from 1 to 1:30 every day, and these are the results from 1 to 1:30. I'm averaging, usually in about 15 minutes of trading time. This is the number of minutes that I have in that period to trade. Today I had 16 minutes, and I was up, today, I don't know what I was up, $1,500 or $150 a contract in those 16 minutes today. I took 13 trades. 13 trades with 1 stop out. And the markets have just been wild today. So in 16 minutes, I took 13 trades. I only had 1 stop out, so some of those trades weren't that big, because I only managed to get to $150 per contract. But so far we've been going for 36 minutes, and I've got 11 trades with 1 stop out. But I missed a whole bunch. I was talking a lot. Alright. Is that in a webinar? Yeah, it's actually on YouTube every day, Wayne. 12 to 12:30 Eastern Time. I don't usually trade in that period, Mark. I mean, you can trade in that period, but I don't usually trade in that period. Right? I start back up. I end at 11:30, and I start back up at 1 every day. So I do from 9:27 to 11:25, really. And then then I do from 1 to 1:30. And then on Wednesdays I come in here at 2:30 and do 2:30 to 4. Those are the hours that I typically trade every day. Okay, so this right here was not a trade because when it crossed over right there, it didn't make it into the overbought. Okay, using the reversal strategy. I was going to send you info in an email about buy, sell, open the next bar on NinjaTrader. I didn't send that to you? I'll send it to you right now. I'm sorry. I thought I sent that out to everybody that asked for it. I didn't install it on this computer. I still have those same problems that I had before on this computer, but let me go find that. Okay. Sent. I'm just going to forward you one of the ones that I already sent to somebody else. Here it is right here. I think this is it. This is it. Okay. just sent it to you. Larry, is that a short on the synthetic? Right here. No, this wouldn't be right here, because it's gotta cross. The red's gotta cross the blue, and the blue's gotta cross into the overbought at the same time. You would have just had a black arrow long right here, and you're almost getting a black arrow short up here right now. Okay, so if this gives us a down close, I don't know if the black arrow is going to be outside the band or not. It looks like it might be. It might be just far enough away to be outside the band on a down close. I'm not sure about that though. It's not outside the band, but it is a white bar, so that's still a really high probability trade when you have the white bar with the black arrow. Regardless whether the black arrow is inside or outside the band, it's still a high probability trade. Okay, it's already gone enough to get the stop to break even if you didn't get into it. If you wanted to get into it right now, it's taking a little bit more risk. But here it is. The stop's at break even, and I'm going to lock in 4. And I'm probably going to end up with 4. Maybe it'll push down some more. Do we have anything down below that? This is where it's trying to get to right here. 27.25. I'm going to lock in 6. Okay, and I'm out with 6 on that one. So you see, I'm using all the tools right here. I'm not just using any particular one. And so far, we are at 91.6% of our trades at break-even or better. I think we had one break-even trade. And we were up about this far before, then I had to stop out. We're back up here now. So this is all you need to do again and again and again. Okay. Hang on a second. There's a couple of questions that came in. Okay, you got it. Tamjo Group, that's good. Philip, what strategy do I use from 1 to 130? I use the mid-band strategy from 1 to 130. Send you that NinjaTrader information. I will send it to you also. And Paul, was that Ninja program? It was either last week or the week before, I think, Paul. But I sent it to you, didn't I? So do I have a way to identify a trend with swing trades to stay out of them? Dan, you're talking about the ones that stop out like this guy right here, right? That's what all these other discoveries are part of that. You know, I'm trying to find the thing that'll do that the best, and I keep finding other things along the way. You know, it's like these squirrels, they're just all over the place, and then I get in rabbit holes. But so I'm still working on it. Okay, I did find something that would reduce those to almost none, but it also reduced all the other trades to almost none. The thing for NinjaTrader, it's called the button panel. I have a video about it somewhere. I know I created some videos about that. I couldn't find them. I think they're on the other computer that I used to have here. But I'll look and see if I can find some videos about it. But basically the button panel is just a... Let me explain to you the way it works. Okay. So you know NinjaTrader has... They don't have a break-even button. That was the whole thing. The whole reason we had... You know, the guy created the button panel was because they don't have a break-even button. But he also saw... You know... What I was doing, you know, constantly doing the math in my head and figuring out where I got to put the order and how to put the buy stop limit order on, where to put the buy stop limit order on, and all that kind of thing. So what he created, and this is a guy from CFRN, right? And he likes to tinker with NinjaTrader stuff and NinjaScript. And what he created was this panel that if you are on, like, let's say this is a 7 range, so I'm using the 7 range DOM, right? I have a bracket set up for a 7 range. So what you do is you have this button panel. And if you have it set to a 7 range, then it's got your stop set, it's got your bracket, your automated trading strategy, whatever you have it set to. You know, if you have like automatic break even or break even plus 5 or whatever your automatic trading strategy is, you incorporate that into it, and you press the button on that panel, and it keeps track of the bar, like the current bar. It knows that the current bar is a 7-range bar, and it knows that it's going to buy 8 ticks from the bottom, so it keeps track of where the order needs to be, and it moves the order around so the order's in the right place. So you don't put a buy stop limit order on, it does. You just press the button and it keeps track of where that order's going to be. Okay? And that's what that panel does. And you set it up for whatever size bar you're using. You can set it up so it'll know, put the order at the top or the bottom. If it's a buy, it knows to move around the order at the top and move the stop around. And it does all that stuff automatically. That's what it is. Alright? Now, I wish I could show it to you on this computer, but I can't. I do have it on my other computer over there, but I don't have, an active NinjaTrader hookup either. I'd have to use like Kinetic last day data or something like that, because I don't trade with NinjaTrader. That's what that feature is. So who did I not give it to? Hal, I definitely sent it to you, and you have it from way back when it was created. But I'll send it to you again. I'll put you on the list. And use bar status, and yeah, it gives you the info, but it doesn't place the trade for you, Bob. This actually puts the trade on for you. Yeah, I can stick it out there too. That might be the thing to do, but then I gotta stick all the instructions out there. Wayne. Okay. So, Shane, I was looking for it in there and I couldn't find it. Because it's one of those guys that did it. But I'll send it to you too, Shane, if you want it. And all you people, you gotta be an active partner here to get this. An active subscriber, but I am making a list of everybody that's asking for it right now. Okay. And I want to make sure. So far I got Wayne, Mark, Shane, Hal. Okay, and you too, Mark. Okay, other Mark. Both Marks. And John. And John and Jill. Jill, you should have it too. And Jeff. And hang on, I'm still at Jill right now. And Greg. Well, a lot of you guys use Ninja. I didn't realize there that many Ninja guys out there still. And I'm not dissing Ninja, I just I'm not putting our stuff on it. You're not the only one, Bob. Yes, combined thing is what you can, Jill. I'm all booked up for this week, but you can definitely set one up with me. About YouTube channel. The YouTube channel is youtube.com/CFRN Wayne. That's the 1-to-130 YouTube channel. Okay. Yes, Jill. I'm gonna say 2 o'clock on Monday. 2 o'clock my time. Let me just make sure I got everybody in here. Jeff, John, Mark, Wayne, Sean, Mark, Hal, Shane. Sid, I already gave you that, right? Sid already has it. Dan, you have it already, right? You don't use it. Okay, I just want to make sure I get everybody that asked for it in here. Can that combination be done with Sierra? I don't know how to do it with Sierra. I'm sure it probably can be done, Sid. I just have no idea how to do that with Sierra. I don't write anything in the Sierra code. I think Sierra is written in C#, just like Ninja is. I'm not sure about that. Alright, so while I was going through all that, we had another black arrow with a white bar. Those trades are usually really good. Look, there's 3 in a row right here. One there, one there, one there. All 3 of those worked out well. Oops, just lost my ES done. I lost something. Was it my... Nope, that's my NQ done. Hang on. There it is. My NQ, my ES. What DOM was that I just lost? Didn't I just lose a DOM? I thought I just had a DOM up there. So I have gold and the YM. Oh, there it was. A YM DOM way over there. And here's my gold DOM. I'm not even sure I'm on the right contract on gold anymore. Probably not. That's probably why it's got such a spread. Alright. So let's kind of want to move these 2 DOMs out of the way because I'm not really trading those. So right now I want to kind of focus on the S because it's not jumping all over the place. We've had some really good trades on the S already. There's another one right here, a purple arrow trade and purple bar trade off the midpoint, the midband that hasn't gone anywhere yet. I mean, you could still take it if you wanted to, or you could just not for right now and wait. So this one right here, the reversal trade was this one right here, right? You guys that were watching that a few minutes ago, with the blue crossed right there, and the blue crossed, I mean the red crossed the blue, and the blue crossed into overbought. So you would have sold right there at the open of that bar, and you would have just sold the open of that bar right there. Actually, that didn't make it into the overbought. You would have bought the open of this bar right here. You see, on a short time frame, it's not really anything that you can do that well unless the markets are really slow. You can do it on the ES, but you can't really do it on faster markets on the smaller time frame. But on a larger time frame, like 100 range, you know, that's where you can use this thing pretty well. Like right here, we would have bought right there at the open, and it gave about, that's 100 range, so it gave about 80 ticks up. I actually did have something that I don't think it's in here, but I had done something in here that tells you how big this stop needed to be and all that stuff. I had created a thing that tells you all that stuff, how big the stop needs to be and all that information, but it's not part of this one. My time. It's in the calendar. Remind me, Jill. Okay, remind me on Monday, because I know I got lots going on in my life right now. We actually closed on that lot on Friday. Friday, was it? Not Friday. Whatever day it was last week. I think it was Friday. So now we're going into home building mode, Jessica. I have one that I like. I can just get Jade on board with it. It's, in my opinion, it's got to be just right for the lot, because of the way the lot is, the slope on the lot, and the setbacks on the lot, and the way that the land is actually... There's one house that I found in architectural designs that's perfect. See, I was thinking that was going to give us something there, but we didn't come out of the overbought. That's why we don't have a color on that one right there. We are kind of doing that, Jill. Well, we're not doing it ourselves, but we're having somebody we know do it. We're not using Schumacher anymore. In North Carolina, Bob. Alright, so this right here, right there, you would have bought the open of this bar. Right there. Okay. You would have bought the open of that bar, right there. As that went into the oversold and that crossed it, bought the open of that bar. See, it's a pretty simple process. And if it crosses it before it goes into the overbought, like this, it crossed it right there, then you're not going to do anything with it. Yeah, Jessica, we were going to do the whole Schumacher thing because it was going to just take the stress off us and they were going to do everything and then we didn't have to worry about anything. That's the way it was supposed to be. But it's not that way at all. You can short it right here. Where's my DOM? Anyway, my mouse is what I was looking for. But it ended up not being that way at all. And they were charging so much money for any kind of a change. So we just bought the land outright. So now we don't really have a time schedule anymore. We can build it as we want now. And it's funny, we had the closing and the lawyer was 20 minutes early for the closing. But because we paid cash, it only took 5 minutes to do the closing. And so she was actually in and out before she was even supposed to be here. Which was kind of nice. That was a white bar short right there. Sorry, I didn't say anything about it. It was a white bar short right there. And this right here, could have bought the open of this bar. Now, on a 7 range, there's not really that much room. It would have been enough to get the stop to break even, basically, in that case. But that's 4 more here. Yes, we were hoping we were going to be able to just, with everything else we got going on in our lives, we were hoping to be able to just kind of count on somebody to do that stuff for us. But I don't know, I kind of think that Jada, she likes doing this stuff. So, like, I imagine you do too, Jessica. 'Cause you do it for a living. Alright, so white bar worked, white bar worked, white bar with the black arrow worked, white bar. That one pulled back pretty deep. That would have been pretty close to a stop out. That was fine, that was fine. And we didn't do that purple bar. We did one other purple bar, 1 or 2 other purple bars. We did one with a black arrow, that one right there. I think we did one of these. So, does everybody in here understand what's going on? I mean, I hadn't even looked to see how many people's in here and who's in here right now. But, does everybody understand what's going on? The trades that I'm taking, why I'm taking the trades that I'm taking, how everything works? Does anybody have any questions? Yeah. Basically, the black arrows, if the black arrows occur outside the bands, you just trade in the direction that it says to trade. Okay, if it occurs outside the bands. If it occurs within the bands, then you want to have either a white or a purple bar to go with it. Okay? And if you have the white or the purple bar without the arrow, that's also good. That's fine. You can take that as well. The reason the white bars show up and the purple bars show up is you're trading off the mid bands, alright, instead of the outer bands. The outer band trades, ones that happen outside the bands like this, those are usually counter trend trades like this. Obviously trends down, and this gives you an opportunity to go long right here. Now, it didn't actually change the trend, but a lot of times when you get an outer band trade like that, it's going to be at the end of the trend or the beginning of the new trend. So right here, I gave you the long trade that worked its way up to the outer band on the other side. And because it hit the band, you wouldn't really want to take that, but because it was a white bar, you could take that, expecting it to get down here. And that was with the trend. So the things that are off the midband are with the trend. Right? So the white bars and the purple bars are with the trend. Okay, so if you have a purple bar with red, you're selling. If you have a purple bar with blue, like that, you're buying. If you have a white bar with blue, you're buying. If you have a white bar with red, you're selling. Okay, it's as simple as that. And so the other thing, which one do you want me to explain, Anjum? Which part? Okay. We're about to get a black arrow here. If we get an up close, that's what the gray arrows are suggesting. If you have gray arrows like that pointing up, it's saying if you get an up close on the next bar, you're probably going to have a black arrow to go with that. Okay, now we got a down close, so it's not a black arrow. If we get an up close on this one, it's probably going to have a black arrow to go with it. Now this is the ES. I've been trading mostly the ES in this session because the NQ's been all over the place. But the one with divergence. Okay, this one down here with divergence, you mean, right? And said the synthetic div indicator, it moves pretty well with the price action. Yeah, if you get up closes, you're usually going to go up with that. But you can see there's a difference in how much it moves. That creates a divergence between here and here. Okay, so it didn't give us a black arrow on the up close. Right, so now you're not going to have any kind of a trade here. Until it could be a white bar trade, but not right now. It's going to get on the other side of the midband because the midband's red. It's going to be on the other side of the midband to give you any kind of a white or a purple bar. Okay, so the one with divergence, this one down here with divergence. The way that it works is like this. Let me blow it up, blow everything up, and you guys can see it a little bit better. The way that it works is like this. Now let me just take these off here for a minute, okay? Because you don't really need to have those on for this. Alright, even though this, let me get rid of price altogether. Alright, so you're not even looking at price. Let's just go to some random place. Some random place before all those places. Okay, here's a random place. Let's start right here. So what you're looking for is when price is in a position where, here, this is probably a better one. When price is in a position where this is going to cross the blue and the blue is going to cross the outer band, and the blue is going to cross in the overbought or oversold. This one isn't a good example, but this right here, okay, where the red is on an up close on this bar right here, you're going to be looking for an up close, and on an up close, because this is right here on an up close, it takes. Right, let me say this in the right order. Down here in the trigger, to get from the overbought to the oversold, it takes 2 bars. You would have 2 down closes to get from the overbought to the oversold. A minimum of 2. Right? You could have some kind of messed up thing where it goes back and forth a little bit, but it's a minimum of 2. Right? So if you're in the middle like this, usually the next up close is going to get you into the overbought. Right? Usually, if you're in the middle, usually the next up close is going to do it. This was not in the middle, so the next up close didn't get you all the way to the overbought. Got you pretty close, but not quite. So if you're here like this, and you know the next up close is going to put you in the overbought, the red right here, that is also going to go up on an up close. Right? And this goes back to what you had asked Sid about the synthetic div. That's also going to go up on an up close. Alright? So if this goes up and that goes up, you know that this is going to go up into the overbought. So this pretty much has to go up across that. When you get that cross and that cross at the same time, that right there, Angel, is what you're looking for. So right here you would sell the open of the next bar. Okay? In this case right here you would sell the open of the next bar. So I'll do a couple of red ones. Alright? You would sell the open of that bar. See this one right here, it crossed down here, it was nowhere near crossing up there. This right here, you would sell the open of the next bar. 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 That's it. On this screen right here, that's all you have. So now let's do some buy the open of the next bar. This one right here would be buy the open of the next bar. Make it green. Okay. That would be buy the open of the next bar. And this right here would be buy the open of the next bar. Now, the deal is, for all the ones that you sell in the open of the next bar, they have to be up closes. All these have to be up closes, and all these have to be down closes. Okay. This one right here, if it was a down close, you'd buy the open of the next bar. This one right here, if it was a down close, you'd buy the open of the next bar. These guys over here, if they're down closes, you buy the open of the next bar. Not this one. Not that one. Not that one. And that's it. Okay, so using this bit of data that we have in front of us right now, without even looking at price, I can tell you what we're looking for, what we're looking to have happen down here. As this synthetic div indicator goes into the overbought, you want to have I'm sorry, as the range trigger goes into the overbought, you want to have the synthetic div indicator cross it like that, in the same direction that it's going. So that has to be an up close, right? An up close there, an up close there, an up close there, and an up close there, and you sell the open of the next bar. Now this one right here looks like it might not have been an up close, I don't know. But you sell the open of the next bar. Now in the other direction, you want the same thing, and you'd buy the open of the next bar. Alright, you buy the open of the next bar. Now all of these right here have to be down closes. Okay, that's the deal. So I don't know, here's price, okay? So all these ones right here, this is one right here that I wasn't sure about because it went sideways. So you would have sold the open of that bar, and that would have stopped you out for sure. You would have sold the open of that bar, worked out great. Sold the open of that bar, worked out great. Sold the open of that bar, worked out great. Bought the open of that bar, worked out fine. Bought the open of that bar, enough to get you stopped to break even. Bought the open of that bar, that would have stopped you out. Bought the open of that bar, that would have been a break even. And bought the open of that bar, that worked out great. So that's it. What if I overlap just the range trigger over the price action? Would it make it easier to see the correlation better? No, because it's scaled differently. That's it. You mean put the trigger up here? It's scaled different. Yeah, I'll show you. You see what I mean? It's kind of messy. Having all those extra lines up there just, it throws me off. Alright, it's 15:36. We have 24 minutes left. 24 minutes left. And we got plenty of trading in, right? How many trades do we have so far? 13 trades with one stop out. We're up $4,850 or 485 with one contract. I'm telling you, 485 with one contract. That's almost half of what it is. Half of the annual. I'm telling you guys, just need to show up for these Wednesday things, and you get your subscription paid for, and then some. I'm gonna go one more time and tell you how to take the free trial. Go here to tvtrades.com. You can do the hyphen trial thing if you want, but the pound trial. Or just find one of these orange things and click on it. That's where you take the trial. I always forget to say that stuff until the end. Even then I forget it sometimes. I am the worst salesman ever. Alright, so I figure I'll just show you. And if that doesn't convince you, then I don't know what will. So here it is right here. Hey, I wanna say something else to you guys. If you ever have an issue, like if a payment went through and you didn't mean for it to go through, let me know, okay? Just let me know. Don't go to Stripe. Let me know, and we'll resolve it without you having to go to Stripe. It's just easier, faster, and cleaner. I just want to say that out loud. Alright, so right here, on the ES. This was just one right here. He would have sold the open of that bar. Okay, that's nothing, that's nothing. This one right here, you would have sold the open of that bar. It's just enough to get your stop to break even. This, you would have bought the open of that bar. You would have bought the open of that bar. That would have ended up working out. Heck, oh, okay. I guess we gotta just do this and go to the end. But you guys get the point, right? Jeff, will I be able to get it? How do we get that so it's just an arrow instead of having to look at it? Yeah. Yeah, the thing about it is I'll have to do it, Jeff. I'll do it, and you'll have to know that that the signal is actually the bar after where the arrow is going to be. Okay, like I did create something. I think it's in here. I did create something. But it's not in there, it's in this one. Maybe it's up here. Oh wait. Put that back on for a second. It might be in here. Did I do it in here? Let's see. No, I did create something that does actually put a whole bunch of arrows all over the place. But the deal is, the arrow, like right here, where you had this one right here. Now, you know that you're going to be buying the open of that bar, right? But to put the arrow on the bar that triggers, I got to shift it backwards one. So the arrow would point up on this one, but you know it's not the bar that it's pointing at, it's the bar after it, where you would actually take the action. Okay, that's the way I would have to do it. Like, you know, like this one right here, it says it's got a down arrow right there. That doesn't mean you're going to short the start of that. You're going to short the next arrow. Like this one right here. But yeah, I mean I can put arrows on it so you can see it if you want to. Very, very few of the gray arrows don't produce black arrows after. But Shane, as I get further and further to a solution to reduce these things right here, then there's going to be more of those. You'll still get the gray arrows, but you won't get the black arrows because there'll be something right at the very end that cuts the black arrow off. The question was what percentage of the gray arrows, of the gray bars, of the gray arrows don't produce black bars. And it's a very small percentage right now, but that's going to change. Okay, as I do find a solution to reduce these kind of stop outs when you get into a stronger trend. And yeah, I already have some things, Jeff. But as I get closer to a more permanent solution, then I'll start doing that. I just, I don't want to start creating arrows for everything until I actually figure out what the heck I'm going to stick with. So there's just a long trade here on this one, the purple arrow the purple bar. See right there? It crossed over there, went into the oversold. Now it's the open of the purple bar instead of the close of the purple bar. See how it's getting in a bar earlier? Now, this is the ES right here. And this was just a black arrow trade from the outer band right here. That's a valid trade. I took it. Here it is. Okay. That should at least get up to the mid band right here. Now my stop has just gone to break even. I'm just going to lock in one tick. It should get at least up to the mid band. It doesn't really have anything. It's not really showing anything on the outside, and it wants to pull back to this number right here at 1075. So it's probably going to do that pullback before too long. Okay, there's that pullback right there. The 1075 is what I said, right? I don't think it got all the way down to 1075 yet, but I think it's going to. Now, did you guys see what I was looking at? I'm sorry, I went through that really quick. That number right there is what I was looking at 1075. That's what it's trying to get to right now. Okay, that anomaly. When it gave the indication right here and it didn't have anything on the upside and it only had that on the downside, I knew that that's what it was shooting for. Okay, and this right here would have been, you would have shorted. That's my Boston accent. You would have shorted the open of that bar right there, going down to the 1075. So you would have shorted right there at 14 on your way down to 1075, which had just hit. The next one down is right here at 825. Did you see that right there? Right there? Yeah, I've been doing that for years and years. You can go, if you go out to that YouTube channel, you can go back, I think we have 7 years of that in YouTube. Now I'm on at different times, but the last year or so I've been doing from 1 to 130 out there. But that's using the mid-band trade. Okay, that's not using this. This is special just for TV trades. Alright, so if you don't hear your name, Hal, Shane, Mark, Wayne, Mark, Jeff, Jill, Greg, Paul, and Bob. All you guys wanted that ninja thing, right? Bob K, Paul SP. Oh, Philip, okay. I didn't have you. See that? I'm glad I asked. Gotcha. From the mid-band, do you use different risk management? No, I always use the same risk management. Larry, you asked for it too? Didn't I give it to you last week? I thought I gave it to you last week. Okay. You're in the list. Joseph Thomas. Good to see you here. Alright. So that TJ email is the one you want to use? Not the other Terra one? Okay, so Joseph Thomas, you had asked a couple of questions through email. The way to get that list of stuff is you click on this thing right here, right under settings. Just go over the name and click on that. That brings up all this stuff. The G line is right here. This is where you change the color of it. You just click on the color and you change the color right in there. Okay. Okay, that's how you do all that. Mark, I think I got you in there. You have 2 marks. Yeah, you're the first one. You're in there. Okay. Alright, so this right here would short the open of that bar right now on ES. Short the open of that bar right here where it went into the overbought and it crossed. That's it. It just went to break even. Fucking 2, 4. That's $500 right there for me. This is not hard to do, guys. This is not hard to do. Out of 15 trades, I've had 1 stop out since we've been going in this session. With 1 contract, I'm up $547. With 10, I'm up $5,475. This is not hard to do. You just got to pull the trigger when it needs to be pulled. I'm actually going to combine it, Cliff. This synthetic divergence thing. I tried to combine it in here, but I couldn't get it to scale right. I had stuck it. I think I had it in here. Oh, it's on the other one. It's in here. I had stuck it in this one, but I couldn't get it to scale right in here. not there. It might be in this one. I have different versions of these things. Here it is, right here. Oops, nope. This is something else that I was looking at. See, these are the arrows that you were looking for earlier, Shane. That's the kind of thing you're looking for, I'm sure. The absolute value, I don't remember why I created that. The millions of things that go through my head when I'm creating all these things. Synthetic trigger and that trigger. I don't know. I'd have to go back and look at it. But I don't remember what the question was. We have a video on using the Sierra DOM. I do, Philip. But what part of using it do you mean? You're in Telegram, right, Philip? Okay. I'm going to give you a Telegram channel that you should go look at. See this right here? You'd be selling the open of this bar. Selling the open of that bar right there, you would have done. Let me give you a Telegram channel for you to go look at. I've got a whole bunch of things out there. I will give it to all of you. A lot of you guys already have it, but I'll just put it out here and you guys can go join it if you want to. This one right here. I have a lot of things in this channel. It's open to the public, so you guys can all go there if you want to. Okay, invite links, copy link. Here it is. That's the link to the Telegram channel. Now in that channel, that is this channel right here. Okay. In this channel, I have videos about stuff that I've done, the midpoint logic, how to set up the DOM, setting the auto break even on the DOM, stuff like that. Like this is what it's going to look like in the DOM that I use. Okay, there's lots of things in here about how to use Sierra charts, and this is the stuff, Wayne, if you're still here, that I do from 1 to 130. You know, the trade setups in here that you might see, that ES1 tick trade, that 15 tick trade, that's using the mid bands. Not the mid bands, the midpoint. Alright, and you guys all have access to that. It's in the TRQ videos channel. Okay, what time is it? Wow, it's 3:51. I only have 9 minutes left. The actual risk management stuff is out here at targetviewtrades.com. It's right here. Okay, that's, I think I also have it on, do I have it on this page? Oh, I guess I don't. No, I guess I don't. Okay, but targetviewtrades.com, it's right here. And let's see, did we have another trade in here? We did just have another trade right there. Right there, that was a trade. Okay. And this actually was right here too. But this right here, in the downtrend like this, that right there was a spot to take the trade and sell the open of that bar right there. And I missed that one. That was a great trade right in there too. When will it be done and available in your scripts? I'm hoping I'll get it done by the end of the weekend, Jeff. Okay, that's my hope. Let's try to get that done for you guys by the end of the weekend. Right, I mean it's pretty straightforward. I couldn't get it to scale right. That's what I was trying to find a few minutes ago. I couldn't get it to scale right earlier. I think I actually took it all the way out of the code before this meeting. I took it all the way out of the code because I didn't want to screw it up. But I just got to get it to scale properly. Once I get it to scale properly, then I can I can add it to the other stuff. So you don't have to have two separate indicators and overlay them like this. Okay. White bar short right there. That is a valid trade. Here it is. And my stop should go to break even after 4 ticks in profit. It's got to get down to 0.5. Let's go one more. There it is. Okay, it just took me out of break even. Yeah, what time is it now? 15:53. Let's go add that one more trade over here. Alright, so if you're in here and you're not using this stuff yet, I've shown you how to take the free trial. There is no reason for you to not take the free trial. It is really free. And this stuff is not hard. Right? I mean, I've done just the ES in here for the most part. I did the NQ right at the beginning, but it was really active, so I kind of kicked it to the curb, and I have been just doing the S. So let me just say this part again in case anybody missed it. The purple arrows and the purple bars and the white bars, they are for trades off the mid-band. To get a white bar for a short, to get a white bar, you have to come out of the overbought, and the mid-bands have to be red for a short to get a white bar. Same thing for a purple bar for a short. The white bar has to be all the way up in the overbought area. I'm not in the overbought area, in the top band area, in this area right up here, in the top band area for a short. Alright? When you have, like right over here, if you have red mid-bands and you get into the overbought, you're not going to get any kind of a bar here because it's got to get above the mid-bands. Basically what it's saying is, it's saying that the market's going down. Oops. Well, here, I'll draw it up here. It'll be like better up here. Anyway. It's saying the market's going down like this. And what's happening, if your mid-band is like right here, it's saying the market is going down and price is pulled back up above the mid-band when it gets into the overbought. And because it's above the mid-band, you're anticipating it's going to get right back down to here because nothing else has changed. That's what it's saying. So when it happens, when it's in this area right here, if it pulls back in this area and you also get into the overbought, you don't really have anywhere to go with that. There's no place to go with that, so it doesn't really trigger in there. It triggers when it's on the other side, and it's still giving you the same information, but it's on the other side and you have some room to run. Okay? That's why this one right here didn't give you a white bar, but this one did. Because the down close from here to here is not very far, but the down close from here to here is. Okay, this purple, you're expecting it to get up to there right now. Alright, the purple is okay because it's blue right here and you're in this section. So what the purple means is it straddled the mid-band. The white means it did not straddle the mid-band. The purple means it did straddle the mid-band. Okay. So this other stuff, the divergence stuff, it's pretty good stuff. And I've traded a few of them in here. I haven't traded too many of them because I've been talking about them more than actually trading them, but there's been a ton of them. A bunch. And I will put arrows on it and stuff, like the arrows that I showed you over here. Those are... Was it in here that I had that? Was it in here? Here it was. Those arrows. I can create arrows like that for this other thing too, if you want to. I know some people like arrows. Jessica, she really likes to see her arrows. And it is less thinking on your part, less decision making. And it's when you guys make decisions, when we all have to make decisions, that's when we screw things up. Honestly, it's sad but true. Damn humans. If it could only be robots. It's coming. It's coming. Automated stuff. Fully automated stuff. Alright. That was a lot of talking. I think I covered a lot of things in this meeting. I told you I had a lot of things to cover. I covered a lot of things. We had some pretty good trades. We didn't hit about half what we did last time. And, last time we did 19 trades. This time we did 16. But what did we have last time? Oh, we had a whole bunch on the NQ the last time. I suppose if I traded just the NQ this time, we'd have had a whole bunch more. But that's probably the difference. If I go over here and we just look at the NQ. You see, I just had a trade there a minute ago. Had a trade here a minute ago. I had a long trade there a minute ago. Had a trade there. Trade there that wouldn't have worked out. Trade there that wouldn't have worked out. Trade there. Maybe the NQ was the one to skip today. Alright, does anybody have any questions about any of this stuff? Because I really don't have to drag it out for another minute and a half. Is 19 range setting best for the NQ? That's what I use normally in the morning. But not every day. Like right now. Right now, the 19 range on the NQ would be crazy. I think. Well, it was earlier in the session. The 19 range on the NQ was pretty wild earlier. But that's what I use in the morning. And the reason I used it in the morning is because it allows me to keep my stop pretty small. Okay, I just took this one right here. And we just got 4 ticks. It allows me to keep my stop pretty small. Now, if it's really crazy, like it can be on some days, then I don't use a 19 range. I use a different time frame. I'll go up to a 39 range. Okay, because with the 39 range, I use a 10-point stop. Yes, decisions without second-guessing yourself is the preferred methodology. The fully automated right glove. Preferred methodology. And I took 4 ticks on that one, so that was 36 there. And 17 here. Okay, what time is it? It's 3:59. Let's go back here, see if we have another trade. There was just one right there. It's too bad. It's jumping around a lot right now. The markets are really jumping around because we're right at the close. So I'm hesitant to do anything right now. Alright, so I guess I'll just wrap it up. So this is how we're going to end the session. Guys, today we had 17 trades with 1 stop out, so 94% of our trades were break even or better in this session. We're up $567 with 1 contract, or $5,675 with 10 contracts. 31 ticks on the ES and 36 ticks on the NQ. We didn't trade the other markets. So now we are averaging, with 1 contract, $443. With 10 contracts, $4,433. So far in this session, in the 37 days that we've done it, with 10 contracts, we're up $164,025. That's a lot of money. In 37 days, working an hour and a half each day. That's pretty good money. What does that come out to per hour? Let's do the math, because that's what I like to do. Clear 37 times 1.5, 55 and a half hours. So 164,025 divided by 55.5. So I'm averaging $2,955 per hour in this session. It's good stuff. If you become a subscriber and this is the only thing you come to, then you'll get your money back and then some. But I want to remind you one more time. The idea is not to trade 1,000 times. We traded 16 times in an hour and a half. The idea is not to trade 17 times. It's not to trade 1,000 times. Right? Get in there, get your money, and stop trading. The more you trade, the more you're at risk. Even if you have a methodology that works, over and over and over again, and in this case here, 94% of the time, the more you trade, the more you're at risk. So it's good to get in there and maybe take 5 trades and not have any stop outs. Yes, that's true, Craig. The fact that I'm talking most of the time in this 90-minute session. But that's just, I'm happy with the way things are. Alright, that is it. One more time, guys, if you haven't taken a free trial, go to tvtrades.com. It's $25 a week. $25 a week, or $9.97 a year. I mean, in this hour and a half, even if you did half of the trades that I did, and you followed me along on half the trades that I did, and you took the 1 stop out that I did, you'd still be positive enough to make up for more than the subscription cost. Okay? There's no reason to not subscribe to this. And let me shut the recording off here. I did show you how to do all that. Alright, so I'm going to shut it off.